Hello, Dan Fitzpatrick here, stockmarketmentor.com, and it's Monday, January 25th. A couple things happened today. The opening bell rang, and I turned on CNBC. So here are three stocks that I saw on TV that I want to pass on to you. First of all, McDonald's. Okay, the company reported earnings today. They noted that they're expanding in China. They've got higher revenues in the U.S., which is different. And also, and most importantly, they supersized breakfast, meaning they're doing it all day as opposed to just during the morning hours. See the movie Big Daddy for more details on that. If you remember, this happened a while ago. I think it might have, I don't even remember when it was, but I remember the last time I was on CNBC, the stock was trading a little under $100. The company announced that they were extending breakfast, and I was the bull on the case. There was another guy that was bearish, and he was basically saying, look, I don't really think it matters that much. It's a desperation move. And I think he was right about it being a desperation move. I looked at it, and I don't eat at McDonald's. I used to, which is why my waist is the way it is. But I looked at it and thought, you know what? If it's a desperate measure, it's a pretty darn smart one because there's a reason they're doing it. Because people are asking for breakfast all day. My projection was a $110 price target. I am not giving you 120 or 130 or whatever. That's not what I do. It was a technical level. So let's just say mission accomplished. And now I'm looking at this as a stock that's probably going to rest a bit. I don't think it's going to keep moving higher in the short term. You can just see it's been in a volatility squeeze. It's had a heck of a move, and it's just due for a pullback. I have no idea whether the stock will ultimately move higher from here. I mean, for crying out loud, they sell, I'll say it, they sell junk food. They sell fast food. I know they got some salads in there, and I've seen some apples. But that's what it is. You know, you ain't getting really super healthy food there, and that's only going to last for so long. But the bottom line is, as far as the Dow goes, this was one of those stocks that was amazing last year when it was close to or at an all-time high when so many other stocks were tailing off. So don't give up on McDonald's. I would just say let the stock settle in a bit before you buy it. Now, Chipotle was on the other side of this deal. A couple of the guys were talking about this on the Fast Money halftime report called Debate It, I guess, about Chipotle, comparing that to McDonald's. Okay, it's more expensive than McDonald's as far as PE and all that. Okay, I get it. The big question here is the E. coli scare, and I think I even said Ebola scare one time, but that's not true. Is the E. coli scare, is it all factored in? Now, we don't know for sure because we don't know the extent of that, whether we're going to have another outbreak of that. But I know this. They report earnings in a week, February 2nd. You're going to see this stock make a big jump one way or another on that. On a weekly chart, this thing is really scarily oversold. But it is still in a nasty downtrend. So I'm going to tell you this. I mean, if you're interested in taking this stock, one way to do it is to buy a small amount just before earnings. And the reason I say a small amount is this. If the news is good, because this stock has been already discounted almost 50%, you will see that small position that you have gain a lot in value very quickly. You're going to be glad you bought some. On the other hand, if you see the stock trade down because it just trades down, you're going to be glad you bought just a little bit, and probably that post-earnings sell-off will then mark the bottom, like just kind of a crescendo of selling. So anyway, that's the way I would trade Chipotle. Or you could do what I'm planning on doing, is just watching all of you do what I just described, because I'm not going to, that's just not my game. I don't trade stocks over earnings. Okay, Twitter. Turns out a bunch of executives are leaving now. Dude, it's about time. I think Yahoo hired him. No, I'm just kidding. So February 2nd is when this company reports earnings. Stock has been in a downtrend. It seems like every week is a new opportunity to get closer to support, which is now $17.21 below where it is right now. Here's the real deal. 1550 support. I think you can be, look, it's a downtrending stock, so this is a counter trend trade. You can be long this stock as long as it stays above this level. If it does not remain above this 1550 level, then you don't want to be long this stock, because just because a stock gets oversold, it has this little bounce. You know, you saw this same kind of thing here. Oh, now the stock's done going down and we're moving up. And that didn't really happen. You could say similar things here. So my whole point is this. 1550, that is your line in the sand. If the stock falls below there, you don't want to be long it. Okay, listen, I'm Dan Fitzpatrick at StockMarketMentor.com. This is 3 stocks I saw on TV, and I want you, if you're not already, to sign up for my free chart of the day, which is a video I send out every day with a chart, hopefully a trade. It just depends on what I see. Just go over to StockMarketMentor.com. It'll be obvious to you to sign up. In fact, if it's not obvious, let me know. We got to change our website.